Now, the last part of this lecture would be to complete your homework assignments. And in order for you to know what to do, I'm going to provide you with a little example to help you visualize what you need to complete for your homework assignment this week. Let's use this example here. This is Renato's travel agency. And basically, it's going to bring you back to the homework assignment that you completed for chapter 1. We have a transaction here that says, on April 1st, Renato paid $5,000 for supplies in account. So if you remember from your first assignment, from your first chapter, you needed to analyze which accounts are affected by this transaction. And you need to remember that you need to affect at least 2 accounts. In this case, when you are buying supplies on account, supplies is going to be a key word that is under assets, and on account means that you are paying it with a credit card, so it's a liability. So you're going to be dealing with the assets and the liabilities. And then now you need to ask yourself, okay, supplies is going to be under my assets, and is this purchase for $5,000 going to increase or decrease my account for supplies in assets? Well, you're buying $5,000 of supplies, so that's going to increase your assets. And if you look under the assets rules, in order to increase the account, you need to debit. This is the reason why I put here that you need to increase supplies or debit for $5,000 since this is an asset. Now, the other part of this transaction is you're going to charge it to your credit card. So it's going to be under accounts payable, which is part of your liabilities. And you're going to be charging to your credit card, which is going to increase the amount that you owe on that credit card. So if you notice, if you want to increase liabilities, it's going to be a credit, which is the reason that I put here. You increase accounts payable or your credit for $5,000 since this is a liability. So how do I transfer that? So we worked on chapter 1 with the tabular form, and I showed you an example earlier in the lecture on how to convert that into the account form. And so what we're going to be doing here is using these T's accounts and have one for each of the accounts that are affected. In this case, it's supplies and accounts payable. And we determined that in the supplies account, you're going to increase the account, so you're going to debit. And remember, debit means left. So you're going to be adding the date of the transaction on the debit side and adding $5,000 on the debit side or the left side. Okay, now when you are increasing accounts payable, we determined that increasing liabilities is a credit under accounts payable. So we go to the T account that's under accounts payable, and the credit is on the right side. So we write that transaction date for April 1st for $5,000 on the right side or the credit side. And that's all you do. Now the next transaction says on April 30th, Renato made a payment for $3,000 for the supplies charged on account earlier in the month. So now this means that at the end of the month, Renato decides to make sure that they wants to submit a payment to his credit card balance so it could be decreased. So it's going to be affecting our accounts payable account and our cash account. It's going to affect cash because we're going to be paying this credit card with cash money. So let's look at accounts payable. Accounts payable is part of a liability. And we're going to decrease the amount, right? We want to make sure that the balance goes from $5,000 to $2,000 because we're going to make a $3,000 payment. And in order for us to decrease the amount under liabilities, you have to debit, right? Under the liabilities. And debit is on the left side of the equation, or the left side of the T account. So we're going to record that on the debit side on April 30th for $3,000. And that's the reason I put decrease accounts payable as a debit, since this is a liability. Now, we also have to decrease our cash account because we're taking money out of our cash account in order to pay this credit card statement. And you know that cash is an asset. So if you look at the asset side and you know you have to decrease the account, then that tells us you have to do a credit under the cash account. So we're going to go over here and we're going to record that as April 30th for $3,000 on the right side in order to decrease it as a credit. Now notice here that there's a statement here that says on April 1st there's a balance for $10,000. Remember that when you open up a business, usually you invest money in cash, so there's usually a cash balance on your cash account. Perhaps there was none, so this balance could actually be a zero if there was $0 in the account. But in this example, it shows that the balance on April 1st was $10,000. And they put it in as a debit because if you look at the asset side, in order to increase the account, you do it as a debit. So you'll see this from time to time where you see a balance on an account, and that's just the beginning balance before you actually start making your own transactions based on the directions on the assignment. And then on April 30th, you credited the cash account for $3,000. Okay, and that's all you do. And if you notice, on each of these T accounts, there's a balance. And the balance either lands on the debit or in the credit side. And I explained to you earlier that when the debits are greater than the credits, then you have a debit balance. In this case, we only have supplies for $5,000. There's nothing really on the credit side, so our balance is going to be on our debit side because the debits are greater than the credits, and the balance is going to be $5,000. Now here, we have transactions both on the debit and the credit side. Okay, and you see that the credits exceed the amount of the debits. When the credits are greater than the amounts of the debits, we have a credit balance, which is the reason why we have a balance on April 30th for $2,000. And the way we end up with $2,000 is, remember, we charged $5,000 in supplies, then we made a payment for $3,000, so our new balance is going to be $2,000. And the same thing for cash. We started with a balance of $10,000. Then we took out $3,000 in the cash account to make the payment for the credit card as a credit. And if you see that debits are greater than the credits, so we're going to have a debit balance. And in this case, it's $12,000. And the way we came up with that is $10,000 that we started. We took out $3,000. We end up with $12,000. This is the first part of what you would need to know for your homework assignment. Now the next, you'll see in your homework assignment that you need to be journalizing this. So based on these steps that we took here, we're going to journalize. And remember that a journal is where you record every single transaction in one place and in chronological order. We bought supplies for $5,000. And remember, supplies is an asset. And in order to increase assets is a debit. And remember that when you journalize, you always debit first and you credit second. The debit is not indented and the credit is indented. And what I mean by indented, that it's shifted a little bit to the right. See how there's a space here. So when you journalize, you're going to journalize the transaction and you're going to write down the two accounts that are affected by the transaction. So in this case, it's on April 1st, you bought supplies for $5,000 and you paid with it on account, or you used the accounts payable account because you paid it with a credit card. So you're going to debit the supplies account for $5,000 and you're going to credit the account for $5,000. And then you add in parentheses a little description as to why you did that transaction, and in this case is to buy supplies on account. The second transaction is you made a payment for $3,000 in cash, right? So on April 30th, you're going to debit the accounts payable for $3,000, and then you're going to credit the cash account for $3,000. And then you add a little blurb in parentheses to describe why that transaction was made, in this case to pay charges on account. And you continue doing that depending on the number of transactions that you need to journalize. Once you finish with the journal, and remember, a journal is like your credit card statement where everything that happened throughout the month, you record it there in chronological order. But then now you want to separate it based on each account, right? So that's where the general ledger comes in. You're going to take all of these transactions and separate them and lump all the supplies transactions together, and then all the accounts payable transactions in another category. So here we're going to have the supplies account, the accounts payable account, and the cash account. For supplies, if you notice in all of these on this general journal, there's only one transaction that's related to supplies, which is the first one. I don't see another supplies account after that. That's the reason why in the supplies account here for the general ledger, there's only one transaction. That happened on April 1st. That was to buy supplies, and it was done by debiting $5,000. And then you're going to record the balance for $5,000 for that line. And then since there's nothing else to really apply here, you bring down the balance at the bottom, which is $5,000. Now you go for accounts payable. And you go back here. And you see that accounts payable is actually affecting two transactions. One here, which is a credit for $5,000. And another one here, which is a debit for $3,000. And they're on two separate dates, April 1st and April 30th. You're going to take those two transactions and record them under the accounts payable area. So on April 1st, you charge supplies on the accounts payable account for a credit of $5,000, and the balance was $5,000. And on April 30th, you made a payment on that account for $3,000 as a debit, so your new balance is going to be $2,000. How did I come up with that? Well, when you bought supplies and you charged them on account, your balance was $5,000, but then you made a payment for $3,000 as a debit, so now your new credit card balance is $2,000. And those are the only two transactions that affect that account, so you are done with this account and you bring down the balance as $2,000 at the bottom. Lastly, you do the same thing for cash. Cash, you see here that it was made, there was a payment here for $3,000 as a credit. Okay? And we also had a balance. Remember we had that balance here? We began with $10,000. Gotta make sure we put it in there. So this is the reason why we have two things here. We have a balance on April 1st that began as a debit for $10,000. And then on April 30th, we made a payment on accounts payable. So we took out cash as a credit. And our new balance will be $7,000. And since this is it for all the transactions, then you bring down the balance at the bottom. If there were more transactions that were related to supplies or accounts payable or cash, then you would see more transactions in this page as well. Okay? It all depends on the number of accounts that are affected based on your analysis. Now you're going to be checking to see if you're doing everything right by doing a trial balance. And remember, a trial balance is just taking the balances on each of these accounts on the ledger and putting them all under one table for easy viewing and access. We have cash, supplies, and accounts payable. And remember that when the debits are greater than the credits, then you have a debit balance and you put it on the debit side. And when your credits exceed the debits, then you have a credit balance and you put it on the credit side. In this case, our cash balance was $7,000. Whoops, what happened here? Let's go back. In this case, we have what happened here? In supplies, we had a debit balance of $5,000. So we put in a debit debit balance for supplies. Then we had an accounts payable balance for $2,000 on the credit side. So we put accounts payable on the credit side for $2,000. And then lastly, we had a cash balance of $7,000, and that was as a debit. So we put cash as on the debit side for $7,000. Now, just to make sure that we are balancing this account, I also added owner's capital here. Owner's capital, remember, is the amount that the owner can claim after all the expenses are paid. Okay? And so that is a credit on $10,000. I added this. I know it's not part of any of the discussion that we had before, but if I don't add the owner's capital in here, these two columns are not gonna balance. One column on the debit side will be 12,000, and on the credit is 2,000. And then you're gonna say, well, it's wrong because it doesn't balance. Well, it does balance because there's other things that are going on with these transactions. But in order for me to just be simple about it and straightforward to explain the homework assignment, I didn't include everything, all the transactions. Remember in chapter 1, you did more transactions than just 3 when you completed the tabular form. So I added this for just simplicity to make sure that my trial balance is balanced to show you that process. So once you finish posting all of your trial balance accounts, your accounts balances on your trial balance, then you're going to be adding the debit column and the credit column. And you have to make sure that the debit column equals the credit column, which in this case is $12,000. And that is all that you have to do. So now let me take you to the homework page, the Blackboard page, so I can show you what you are expected to do for this week's assignments. Under week 4, you're going to see that you're going to have your chapter reading, you're going to have your PowerPoint, and then you're going to have your lectures. This time I split the lectures in 3, partly because, I was interrupted in the first part. And in the second part, I just kind of left it off with the lecture. The third part, which is how to complete the homework assignments. And I might be doing that for the future lectures. I might be splitting up the lectures based on concepts. Maybe one of them should be the review for the week before. Or perhaps, reviewing the answers to the homework assignments. Then the second part, I'm probably going to do the lecture part. And then the third component will be how to do the homework for the current week. Let me know if that works out better than just having one lump lecture that you have to listen through all the way to the end. And then you're going to have your lecture assignment. So all you're going to do, again, is just click on the link. It's going to take you to the Wiley Plus page, and you're going to see that you have 10 multiple choice questions. And that's based on your readings and the lecture. And again, this is just to assure that you are reading the assignments. You have one attempt to do these, so make sure that you are answering them correctly, as you only get one chance to get it correct. Then you're also going to have your homework assignment for chapter 2. And your homework assignment for chapter 2 is basically what we just covered right now in the lecture. It's only one homework problem, but the homework problem has 3 parts. It's going to give you all of these transactions, which are similar to what you did in chapter 1 for the tabular form, except you're not going to be recording them in the tabular form. You're going to be recording them as journals. So you have to determine which 2 accounts are affected and which one's a debit and which one's a credit, and you have to record it accordingly. Remember that each of you have the same problem but the different numbers. And I do that on purpose so that you do not copy each other in one form or another, okay? It's for you to be doing your own work. Now let me go over the second part right here, which may throw you off. And the reason Wiley does this is because you also, as an accountant, need to determine when a transaction needs to be recorded or not, when an event needs to be recorded or not. Remember, we have the monetary assumption that we only record stuff that pertains to money. The second transaction here that it's asking you to do is on April 1st, this person hired a secretary or a receptionist at a salary of $700 per week, payable monthly. And if you notice here, this says no entry. The reason it's no entry is because when you hire someone, it doesn't necessarily mean that there's money affected by that on that particular day. Just because you hire someone doesn't mean you're going to pay them that same day. Usually you're going to pay them maybe by the following week or in 2 weeks, or sometimes you even get paid monthly. Here you hired a secretary and you determined that you're going to pay them $700 a week, payable monthly. That's it. You didn't pay them that day. Nothing happened. There's no exchange of money. That's the reason when you run across transactions like that and you know that they have no monetary value, you know that they're not supposed to be recorded, you're going to be recording that as a no entry. A no entry for the debit, a no entry for the credit, and you put 00. That is just a way of us checking that you are paying attention and that you're not just journalizing for the sake of just journalizing, because you have to make sure that you review that some of the transactions cannot be recorded because they do not involve money transferring from one place to another. And you're going to be continuing to do that for each of these transactions here. You're going to be journalizing them. Once you do that, it's going to take you to part B. And notice it says the parts of this question must be completed in order. This part will be available when a student completes the part above. If you don't do this part completely, you can't move on. It's going to take you to this. And this part, it says you have to post everything that you had in the general journal. Now you have to post it to the ledger. Remember, posting to the ledger is separating each of the transactions based on each account. So you're going to have all the transactions that are pertaining to cash in one area. All you're going to do is look for them and transfer them either as a debit or a credit, depending on how they were recorded. Like, for example, April 11 was cash as a debit, but on April 30th, there was a cash as a credit. You make sure that you journalize every single one in chronological order as a debit or credit and find the balance. And you do the same for the rest, for accounts receivable, for supplies, for accounts payable, and so on. And again, it's not going to let you go on to the next part until you finish this. And it's going to take you to part C, which is asking you to do a trial balance, which all you do is take the balances of each of the accounts and post them either as a debit or credit. Then you find the balance on each of the columns and you make sure that they balance by having the same amount. And that's it for your homework assignment. Then you're going to have a quiz. The quiz is not timed, and it's going to be based on 3 homework problems, on 3, they're called duet or reviews, and it's going to ask you some similar questions. It's going to ask you what form should all of these activities be recorded. They're going to ask you to prepare entries in the general journal. And that's it for that homework, for that quiz problem. The other quiz problem is going to ask you to post some stuff on the T accounts. And the last problem is going to ask you for the trial balance based on these accounts here. Notice that you have, for the lecture assignment, you only have 1 attempt. So you need to make sure you do it right. It says right here, this is limited up to 1 attempt. But for the homework assignments, I think I made it for 3 attempts. You have 3 attempts to get it right. Okay? And it's not timed. And I think I did the same thing for the quiz. Let me just check that. For the quiz, I did it up to 3 times again, and it's not timed. So you have plenty of chances to get this right. This time, there's nothing for you to turn in electronically. Everything's going to be done through Wiley, so it's going to be automated. Okay? If you have any questions, let me know, and good luck to you this week.